middle of earnings season, Brian, and for the most part, it's been pretty good, and the market has reacted accordingly.
That's correct. Coming into earnings season, a lot of people were expecting a slowdown in earnings growth. So a slowdown, but not a stopping. I think that's a good thing. But 5% year over year earnings growth in the second quarter versus 13% in the first quarter, it is a marked slowdown, but it's not a uniform slowdown. There are plenty of companies that have been beating expectations. Those who have been missing seem to be getting punished a little bit more than usual. I think that in terms of who has reported so far, so banks, they were the first ones out of the gate. They really, I think, painted a fairly decent picture of the economy, saying that consumers are still doing what they do best, which is consume, even if they're under a little bit of pressure. Default rates, so kind of failures and all that are really not on the horizon. What we're really hearing then is more from the tech sector. They have reported, Alphabet is, I guess, technically what they're called. Their earnings were really interesting because they have been one of these almost Johnny-come-lately to the AI race behind companies like OpenAI, but they're showing how you can actually monetize, make money off of artificial intelligence. A lot of it is through advertising, the search results that you get, but it was incredible. The capital expenditure plans that they announced, they increased it to about $85 billion for this year, which is just an incredible amount. If you look at all the other 499 companies in the S&P 500, the artificial intelligence companies like your Alphabets, your Microsofts, your NVIDIAs, all of them, they are basically all of the capital expenditures there.
Right. Yeah, and AI, of course, is coming upon us, and it's not going away, folks. And so I think there's going to be a marked difference in the next, for sure, 1 year, but definitely 3 years. I mean, we're already seeing it in our business, the things that AI can do. But, when listening to some of these earnings reports, most of the companies that are affected by them are talking about the tariffs. Mm-hmm. And so August 1st is barreling down the road at us. And Britain got a deal, apparently, right, with the 10% tariffs. And we'll have to see if anyone else is going to get that. But August 1st is coming quick. And it looks like the EU might get a 15% tariff. We'll see if there's some exemption for some of the German cars that are coming in. But when that comes, it's going to have an effect on spending, right? Mm-hmm. And you and I have talked about this over and over. If there's a tariff, somebody is paying it.
That's right.
Either the importer, the exporter, the consumer, someplace this is getting paid by someone, right? And so that has to have an effect on the economy. What is funny about how these deals are being put together, you see that Brazil is getting really hit hard because the president doesn't like Lula da Silva, right? Yeah. And so now he's talking about a 50% tariff. So, but this is my question to you. Does this have an effect on the dollar, and will it or could it mitigate some of this risk?
Oh, it really could. And President Trump has talked about that, how a strong dollar, even though that's kind of officially the policy, it's more we want the dollar to be used internationally. But the level of it, the price of the dollar compared to other countries' currencies has been on just this tear higher over the last 10 to 15 years. And it does make it more expensive for U.S. firms, less competitive to export. And so I think that some of these tariffs, what it's trying to do is rebalance that a little bit. Some of it is the price competitiveness, maybe subsidies from foreign governments for their companies, but then also a possibility of the dollar declining in value. It doesn't mean that the dollar is necessarily going to no longer be used in international transactions. It's just that its value is historically high relative to a lot of these other countries.
And so a weaker dollar doesn't mean a weak dollar.
Correct.
Right? Yep. But this is good for profitability, especially for companies that export goods, because it makes them more profitable. And so we're watching this, and of course Trump had a little event that he had with Chairman Powell this week. So there was
that was entertaining.
It was a live debate for sure.